Hello, everybody. This is Stefan Dotel at DrivenCandles.com. We're here just to talk about a MACD divergence. That was a really great example I found on all the charts I was looking at. Today's June 17, 2014. And our disclaimers. We are not a licensed financial advisor, broker, or dealer. This video is for educational purposes only, and the viewer should do their own due diligence before making any financial investments. So we're just going to make this quick today, show you MACD divergence. Don't let the name scare you. It's one second here. Thank you for being patient. Okay. So first, I'm actually going to start with a 2-year chart on this. So in full disclosure, we have a position in this stock and have had one in it for quite a while. What we're looking at here is a 2-year chart. And we started running into trouble over here. And if you look at the daily chart, you can really see this choppy mess in here. And that would give you a real stomachache looking at that. So, to take the noise out, we're looking at a 2-year chart with weekly candles. So you can see we start getting into trouble. We have the cross of the CCI, then it comes back up, then we get another cross of the CCI, and the fast-moving average, the 10-week moving average, is crossing below the 40-week moving average. And if this had crossed, that would have been a sell signal for us to get out of this position. Now this stayed at the same value right here. It's like 23, 22, 21. And if you go back and listen to the video from about a week or two ago, I said the only saving grace we may have is that this may not cross. This would have had to stay above that moving average quite a bit to pull it back above, and also to pull this up, which it finally did. So when you get good with your indicators, then you can actually kind of tell what they're going to do. It takes a long time, and I've actually studied this indicator very in depth. So anyway, just to show you that this is how and why we stayed in this trade, because we followed our rules. We had a system set up to tell us when to get out. Because normally when I see something like this, without a system, I'm going to just jump out of this. Because it's just too up and down, and I'm just not the kind of trader that we are here. However, to the MACD divergence. So we have our nice peak here. We hit a bottom, a second low, a third low, and then a little mini double bottom. Now I'm going to bring this up just so you can really see what's going on. The first divergence is this high here with this high in this MACD. And then the second two highs, and the high and the MACD, are much lower. So there's your first divergence of bearish momentum that it is probably going to take a turn down. Now, for those of you who don't know what the MACD is, I'm not going to go into the math, but it involves 3 moving averages. This one has an 8 period, a 17 period, and a 9 period. And basically, when the signal line, which is the blue line, crosses the yellow line, that's an entry. And vice versa, when the signal line crosses down below the yellow line, that's an exit. And when the blue line is above the 0 line, or this line here, it's bullish. And when it's below it, it's more bearish. So what you want to watch for, what this tool is really good for, is divergence. And so we have a low here with a very deep low. Then we have a low here that's lower than this low, but now you can see this is higher. Then we have even lower lows with even higher. So people are basically willing in a relative way to pay more money for this stock at these areas. So the weak hands are getting pushed out and the institutions are stepping in and picking this stock up. I don't know what the volume looks like. I imagine it's pretty. As you can see here, they really stepped in. The institutions really stepped in here. And even in here, there was some good buying. Now, a lot of people just use the histogram, which is these here. And all of that is you can see that the blue has crossed above the yellow for a positive signal. And basically, we've got the white histogram up and we've crossed down, and now we have the red histogram. So we have the low with a big histogram, the low with a smaller histogram, and this double bottom here again with not much of a histogram. These do not always agree with the two-line, and a lot of people do use the histogram. But the point being is when you use the MACD, don't make it too complicated on yourself. It's just a tool to kind of see the up and the down. And in the future, you can go ahead and try to learn more about those types of things. But in this case, what we can basically see here, get my annotator to work, is that we have a down movement here, and we have an up movement here. Now, in most cases, the indicator is going to go out. This is like, again, what we call behind the tape. This is what's really happening here. People are, it's like if you were buying a house, at this point, this is a seller's market. We're way down here, this is a seller's market. So whatever people are offering is what the seller, the homeowner, is taking. The more we go down here, it's starting to become a buyer's market. So I'm sorry, I said that backwards. So here, people are willing to pay more for their homes. So whatever the seller is asking, people are willing to pay for it. Here, whatever the seller is asking, they may not necessarily get. So this is a buyer's market here. Here, it starts to become a seller's market as people are willing to pay more. As you can see, the MACD is higher. And again, here, we're still having the seller's market because people are willing to pay more in a relative fashion. So, and again, we have the same divergence here. We have this down move and this up move here. Eventually, when you see this divergence like this, and you see these crosses, it's kind of a possible signal to get in. We use it several different ways. Anyway, I hope that was clear. If not, please email us at tradingcandles.com or go to the website and submit a question. Again, you can email us at info@tradingcandles.com or go to the website and send us a question from there. We would be happy to answer it. Thank you very much. I hope you were able to gain some knowledge from this.